What's up, guys? Alex Cohen here with a new video covering how to read a 10K. I will go over which sections are the most important, how to navigate and understand them, and how they play a role in understanding Apple. You will better grasp how to read a 10K and have a much better understanding of Apple. There are 6 main parts to any 10K that you must know: business, risk factors, properties, legal proceedings, management's discussion and analysis, also called MD&A, and financial statements and details. Apple's 10K outlines its description, products, and services. The company designs, manufactures, and markets smartphones, personal computers, tablets, wearables, and accessories, and sells various related services. It has 4 main product segments and 5 main services segments. To start, the next section is risk factors. The first risk that Apple notes on its 10K are risks related to COVID-19. The company's component suppliers and manufacturing and logistical service providers have experienced massive disruptions resulting in supply shortages that affected sales worldwide. The company, as you know, closed many retail stores as well as channel partner points of sale during COVID. The company has at times required all of its employees to work remotely. Another risk is stock price volatility. If Apple fails in any way to meet expectations related to future growth, profitability, dividends, share repurchases, or other market expectations, the price of the company's stock may decline significantly. The other risks that I'm going to go over in the next few slides are macroeconomic and industry risks, business risks, legal and compliance risks, and financial risks. Now on to macroeconomic and industry risks. To start off with, macroeconomic risks. The company has international operations, with sales outside the United States representing a majority of the company's total net sales. The company's global supply chain is large and complex, and a majority of the company's supplier facilities, including manufacturing and assembly sites, are located outside the United States. Adverse macroeconomic conditions, including inflation, slower growth or recession, new or increased tariffs and other barriers to trade, changes to fiscal and monetary policy, tighter credit, higher interest rates, high unemployment, and currency fluctuations are among the what I would call adverse macroeconomic conditions. Changes in consumer confidence and spending can also adversely affect in response to financial market volatility, negative economic news, conditions in the real estate and mortgage markets, declines in income or asset values, changes to fuel and other energy costs, labor and healthcare costs, and other economic factors can also have a negative effect on Apple. And there's also uncertainty about or a drop in global or regional economic conditions that can also have a significant impact on the company's suppliers, contract manufacturers, logistics providers, distributors, cellular network carriers, and other channel partners. So it's not just Apple, but it's also all of its surrounding channels that it operates in. For example, tensions between the United States and China have led to a series of tariffs being imposed by the United States on imports from China's mainland, as well as other business restrictions. Next, onto some industry risks, which I noted only a few. The company's products and services are offered in highly competitive global markets characterized by aggressive price competition and resulting downward pressure on gross margins. frequent introductions of new products and services, short product life cycles, evolving industry standards, continual improvement in the product price and performance characteristics, rapid adoption of technological advancements by competitors, and price sensitivity on the part of consumers and businesses. So all of these factors that Apple notes in their 10K are all different things that are relating to the industry, how competitive it is, the structure of how products are produced and how often they're produced, all comes into play. And continuing on that point, continuing and timely introduction of innovative new products, services, and technologies to the marketplace are always coming. Now, because of all this, the company must make significant investments in R&D, research and development. And there's a risk because there's no assurance that these investments will achieve the returns that Apple's expecting. And the company might not even be able to develop and market new products and services successfully. So Apple might be throwing tens of billions of dollars into new research and development projects to continue to produce new services, products, and technologies, but they might not even be that successful. Now on to business risks. Apple must continually introduce new products, services, and technologies, enhance existing products and services, effectively stimulate customer demand for new and upgraded products and services, and successfully manage the transition to these new and upgraded products and services, which all present risks while doing so. While these arrangements can lower operating costs, they also reduce Apple's direct control over production and distribution relating to manufacturing, primarily outsourced to Asia. Manufacturing can be disrupted for various reasons, including natural and man-made disasters, IT failures, commercial disputes, military actions, economic, business, labor, environmental, public health, or political issues, or even international trade disputes. At times, subject to even industry-wide shortages and significant commodity pricing fluctuations. A good example that Apple gives in its 10K is the global semiconductor industry is experiencing high demand and shortages of supply, which has adversely affected the company's ability to obtain sufficient quantities of components and products. So not only are there costs probably for these input costs are going up, but there's less of these inputs available, so it probably leads to longer lead times and stresses the supply chain. And of course, the company can be exposed to other things such as product liability claims, recalls, product replacements or modifications. They might even need to, at times, write off inventory, property, plant, equipment, also called PP&E, intangible assets, and also things like significant warranty and other expenses that they have with their various products. And they might even incur litigation costs and regulatory fines. And I do note two more risks, additional business risk, which I think are pretty important as it relates to Apple's particular business, and that's inventory management is a big one. So the company's forecasted component and manufacturing requirements, typically they order or they prepay for orders typically for periods up to 150 days in advance. So because the company's markets are volatile, competitive, and subject to rapid technology and price changes, there's a risk that Apple will forecast incorrectly, and they might order or produce too much or too little of components or products, and they might not fully utilize their firm purchase commitments that they made with their suppliers. And some other risks to note is there's always reputational risks, potential loss of competitive advantage. Let's say like another company develops a more advanced technology or a more competitive product. There might be poor market acceptance. So even if Apple does create a new product, it might not be accepted widely in the market. There could be reduced demand for Apple's products and services. And there also might be a delay in a new product and service introduction. So that might be because, what I mentioned before about the availability of semiconductors. There might be delays just due to more research and other issues. So there's a lot of business risks relating to Apple. And the main thing to note, the difference between business risk and industry risk, is industry risk basically affects everybody in Apple's universe. And business risk is basically addressable just to Apple, its own operations and internal business risk related to Apple. So the next risks that are in the 10K, and they're very important to note, are legal and regulatory and compliance risks. So Apple has faced and continues to face a significant number of patent claims relating to its cellular-enabled products, and new claims may arise in the future. The company's global operations are subject to complex and changing laws and regulations on subjects including antitrust, privacy, data security, and data localization, things like consumer protection, advertising, sales, billing, and e-commerce, product liability, intellectual property ownership, also called IP, and infringement, digital platforms, the internet, telecommunications, and mobile communications. There could be changes in laws and regulation on media, television, film, and digital content. There could be availability of third-party software applications and services. There could be changes to labor and employment laws. There could be anti-corruption laws, import, export, and trade law changes, foreign exchange controls and cash repatriation restrictions, anti-money laundering, foreign ownership and investment, tax changes, new laws and regulations based on environmental health and safety, including electronic waste, recycling, and climate change. So there's like a huge range of different issues relating to their global operations, and they're constantly changing in terms of laws and regulations. So it presents a lot of risks, and of course it's very expensive to manage all those risks globally for a company as big as Apple. And there's new legislative initiatives such as the proposed EU Digital Markets Act. So for those of you who may not know what that is, it's basically the company charges developers for access to its platforms, and they manage the distribution of apps outside of the App Store. So there's like litigation in the EU regarding their App Store. And there's also federal, state, or international privacy or data protection laws and regulations. So, and this doesn't just have to do with your personal information that Apple collects on you, but because of new services that Apple started to offer relating to health data, financial data with its Apple Card, and biometric data, with a Face ID and the fingerprint, all of those data that it's storing is subject to various laws and regulations in different countries and different states, in different regulatory authorities. So all of that is really important to note based on risks. So the next risk to note is financial risks. Now, financial risks are so complicated that I needed to break this up in two separate slides. So the first few financial risks that Apple notes in its 10K. So the company's profit margins vary across its products, services, geographic segments, and distribution channels. So obviously the gross margin of Apple's products and services varies significantly, and they change over time relating to their products. So their sales changes based on iPhones change based on iPhone, but can also change based on the geography of where the iPhone's getting sold. And, there's factors including continued industry-wide global product pricing pressures and product pricing actions that Apple may take in response to such pressures. There's increased competition. The company's ability to effectively stimulate demand for sure of its products and services, compressed product life cycles. So, things get old very quickly in the technology world. There's potential increases in the cost of components. So that's relating, a good example of that, as I mentioned before, that's relating to like the global semiconductor shortage. There's outside manufacturing services, and there's developing, acquiring, and delivering content for the company's services. The company's ability to manage product quality and warranty costs effectively. There's shifts in the mix of products and services or the geographic, currency, or channel mix, including to the extent that regulatory changes require the company to modify its product and service offerings. There's fluctuations in the foreign exchange rates and introduction of new products or services, including new products or services with higher cost structures. There's also a seasonality standpoint. So we just went over margins vary, and there's so much, as I just mentioned, that goes into margins as it relates to their various segments of product services, and you can further segment that on a geographic basis. But now we're going to talk a little bit about seasonality. So for Apple specifically, there's higher net sales in its first quarter compared to all of its other quarters in its fiscal year, due in part to seasonal holiday demand. So, during Christmas time, Apple notices a surge in revenue on all of its products because of the time of year. And lastly, on this particular slide, I note FX changes. So foreign currency changes are very important to note, especially in this current environment. So because I mentioned before, the majority of Apple's net sales are internationally outside the United States. So if the foreign currencies weaken relative to the US dollar, it affects US dollar value of companies' foreign currency denominated sales and earnings. So it leads Apple to raise international pricing, which might actually reduce demand. So Apple might be forced to raise its prices overseas because of various currency changes getting weaker to the dollar. In some cases, because of competitive or other reasons, maybe regulatory reasons, Apple might not decide to raise its international pricing to offset the US dollar getting stronger. So what would happen is if they can't raise price, the way the formula, for revenue minus cost for profit, gross margins the company earns would go down based on foreign currency denominated sales. Conversely, if foreign currencies strengthen against the dollar, while generally beneficial to the company's foreign currency denominated sales and earnings, could cause the company to reduce its international pricing and incur losses on things that they use called foreign currency derivative instruments, limiting the benefit. So if foreign currencies get stronger relative to the dollar, what Apple can do is actually lower their prices to be more competitive. The issue with that is they're going to get hit losses on their FX derivative instruments that they use mainly for hedging. In addition, if foreign currencies also strengthen relative to the dollar, it might increase Apple's cost of product components denominated in those currencies, thus adversely affecting gross margins. Because if the foreign currencies get more expensive, that means that our dollar is worth less overseas, so we have to pay more to produce things like semiconductors and various components to Apple's products. And generally speaking, the way that Apple manages those risks is they use derivative instruments such as foreign currency forward and option contracts, which I won't go into because it's far more complex than what we're talking about. But Apple uses these forward and option contracts to hedge specific exposures to fluctuations in foreign currency exchange rates. So these hedging activities, there's a risk that they might not be that effective on offsetting any or more than a portion of the adverse financial effects of unfavorable movements in foreign exchange rates over the limited time the hedges are in place. So basically, Apple has these derivative instruments that basically use as like a counterbalance for any major changes in fluctuations in foreign exchange rates. And these derivative instruments, they don't last forever. They're forward and options contracts, so they have expiry dates. So there's a risk that even if Apple is successful in implementing its derivative instruments, it might not be successful in hedging all or most of its risks. And they might mistime the derivative instrument, so they might take a loss on the derivative instrument. So there's many different components related to FX changes. So currently, in a state of stagflation, there's many implications for foreign exchange rates overseas and how that plays into Apple's profit margins by geography and overall. So those are very important risks to understand, and the 10K can definitely go much more in depth than I will go in these slides about their foreign exchange financial risks. So there's 3 more points to note relating to financial risks. Starting off, the company distributes its products through third-party cellular network carriers. So these are companies like Verizon, AT&T, T-Mobile. They distribute them via wholesalers, retailers, and resellers. And a significant portion of the company's trade receivables can be concentrated within cellular network carriers or other resellers. So there's risks with that as well. The company's exposure to credit and collectability risk on its trade receivables is higher in specific international markets, and its ability to mitigate such risk may be limiting. So in certain geographic segments in the world that sell Apple's products, there might be risks in terms of just collecting that revenue. And the last risk on the financial risks that I want to address are prepayment risks. So Apple has made prepayments associated with very long-term supply contracts to secure the supply of inventory components. And there are various risks to note about that. Some of them are a bit too complicated to go over in this particular presentation, so I won't go over that, but I definitely would suggest going in the 10K and going through, because Apple goes very into depth with those prepayment risks. So the next factor relating to 10K are properties. Now, we're lucky with Apple that Apple has is pretty simple relating to properties. As you may or may not know, and as I mentioned in previous slides, Apple outsources almost all of its production of its products overseas, mainly in Asia. So they don't actually own any of these factories or products because they're all outsourced. So the only properties that Apple owns or leases are their company headquarters, which is located in Cupertino, California. Apple also owns or leases facilities and land for corporate functions, research and development, data centers, and of course all their retail stores that they have locations throughout the United States and globally as well. The next portion of the 10K, which is extremely important, but thankfully there's only one active proceeding as of the latest 10K for Apple, and that's legal proceedings. So the only legal proceeding on Apple's 10K that they mention is with Epic Games. So I don't know if you've heard of what's happening with Epic Games, but basically Epic Games filed a lawsuit in the United States District Court for the Northern District of California against Apple, basically alleging that Apple's violating federal and state antitrust laws and California's unfair competition law based upon the company's operation of its App Store. So I mentioned before about its App Store, so the EU is also trying to crack down on Apple's App Store based on antitrust issues. And Apple, what they did is they file a counterclaim for breach of Apple's App Store contract. And basically what happened was the Northern California District Court ruled in favor of Apple concerning 9 out of the 10 counts, including in Epic's claim, and in favor of Apple concerning Apple's claim for breach of contract. The only thing is, though, which is sort of important to note, is that the Northern California District Court found that specific provisions of Apple's App Store review guidelines violate California's unfair competition law, and they issued an injunction. Now, obviously, Epic Games, they tried to appeal the district court's decision. Apple also will probably appeal it. But it's very important to understand what the outcome of this law might be, and these rulings might be towards Apple's App Store, because that's a major portion of Apple's services is their App Store. The next portion of the 10K, which in my opinion is probably one of the most important sections, is the MD&A, the management discussion and analysis, because that's the part in the 10K where the management really drills down into the specifics of how each business works. So with Apple's MD&A section, they go over a COVID-19 update. They go over the COVID impacts on all their retail stores, how they had to close them. They go over remote work, so how they had to, at certain times during the pandemic, they had to have all of their employees work remotely. There were, of course, various supplier disruptions because of the pandemic, and as I mentioned, the semiconductor industry constraints, especially things with China and the disruptions there. So there's a lot of interesting points that the MD&A can give you relating to specific details for Apple. So the first portion on the MD&A, Apple goes into two things, which I want to go through, is their net sales segmentation on product and services, as well as by geography. So the first table that you see is by product and services, and you can see how it's broken out based on iPhone changes in revenues from 2019, 2020, and 2021, all the way to services. And then on the bottom, you can see Apple actually breaks out individual geographic segment groups based on that. And if you really go more in depth in the 10K, they make certain disclosures and they give details on specific geographic segments or a specific product area, and they'll explain why they believe that the change was as high or as low as you're seeing it in the 10K, which is very important to note. All right, and the next section in the MD&A section, they go over gross margin based on, and it splits on product and service margin, so you can kind of see how it splits out with gross margin on its products overall versus its services. And something that I like to do is, you want to go into not only, gross margin by segment, but you also want to compare that with the growth rate of the gross margin by segment, and then the sales growth rate by segment. And then you can even take a step further and you can break it out by geography, by a specific product. You can get very creative with these analytical tools that you can do just based on the numbers that are available in the 10K. And the second table, which I think is very important to understand, are operating expenses. So I mentioned earlier before that Apple spends a lot of money on R&D. So in 2021, they spent nearly $22 billion in R&D, which was 6% of their revenue. Now, is 6% a lot? Well, you'd have to check in Apple's universe, what is Apple's R&D spending relative to its sales, relative to its peers? How has it changed over time? How has its R&D affected sales? Has any increases in R&D resulted in increases in sales? You can also see their SG&A expenses and total operating expenses. So there's a lot of different things you can do based on this information. And obviously, if you go really into the details in the 10K, they'll outline specific projects on R&D spending. More specific, they'll drill down on the SG&A spending. So you can really get into the nitty-gritty details of what all these numbers mean. So the next section of the 10K relating to the MD&A is the liquidity and capital resources section, which I think is also very important. Apple's known to be a very liquid company. So their cash equivalents, and unrestricted marketable securities totaled $172.6 billion, which is a lot of money. I mean, they have more cash than their total debt, and Apple's a global, massive company. It's one of the biggest companies in the world. And speaking of their debt, they have outstanding floating and fixed rate notes, $118.1 billion in debt. Now, if you actually go into the 10K, you can actually see a breakdown on the different components of the debt. Now, something I'll note is you can actually see things like how much of this debt is due within the next 12 months, within the next 2 years, 3 years. So you can see different debt payment schedules. You can see, and sometimes the company will note, which they did in this past 10K, is they mentioned something that for every 100 basis point increase in market interest rates, so that's 1% increase in market interest rates, Apple interest expense would go up by $186 million. Now, you don't really need to be concerned too much about Apple's debt, as it seems, because Apple has more total cash than its total debt. And according to the 10K, they only have $9.6 billion payable within the next 12 months, and their future interest payments relating to their fixed rate notes is $2.9 billion payable in the next 12 months. So they have more than enough cash to cover any of these short-term obligations. But some companies, you really have to pay attention to the debt because they might be more cash strapped. So these debt numbers might matter a lot more when you're thinking about a company that might have a lot of debt and not a lot of cash. And something unrelated to note, which isn't really a big deal with Apple's 10K because it doesn't really make up a large portion of their balance sheet, but Apple also has $6 billion in commercial paper. And something else which I think is probably the most important thing to note here is their fixed lease payment obligation. So I mentioned before, they have 150 payment day cycles with all their manufacturing facilities, and they make these very long-term, large contracts with their suppliers. So in the next 12 months, they have $1.8 billion due of these nearly 15 billion in payment obligations. But something that's very good is Apple has a days payable of 150 days, which means that Apple has a billing cycle of 3.5 months. 4.5 months. So Apple has 4.5 months to pay back their suppliers. And I'm sure that their accounts receivable days is lower than this 150 days. So they have, of course, generous payable days cycles with their suppliers. It's mainly because Apple's a very large company, so they are able to negotiate favorable terms. And the last section, but certainly one of the most important sections of every 10K and 10Q of any company, especially Apple, are their financial statements and details. So Apple, there are 3 financial statements, the income statement, balance sheet, the cash flow statement. So there's a variety of different line items, which I won't go into in this presentation because this is not a presentation on financial statements. This is focused on just how to read a 10K. So all of those statements, you really want to dig into all the line items. You can do a ratio analysis. You can go into, how it compared to in the past relative to even other industries. There's so much information you can go into. And, Apple also goes into its revenue recognition policy, which is important to note. So it basically, according to the 10K, Apple recognizes revenue when control of the products or services is transferred to its customers. And control is generally transferred when the company has a present right to payment and title, and the significant risks and rewards of ownership of products or services are transferred to its customers. So what that means in layman's terms is they can only recognize that revenue until it's actually sent via mail to the customer. And basically, Apple, according to their revenue recognition policy, once they recognize that revenue, they have 3 performance obligations. The first obligation is their hardware and bundled software must all be delivered at the time of sale. They also have to include all of its bundled software, including iCloud, Siri, and Maps must also be available for immediate use as of the time of the sale. And the third obligation is on a, as they call it, a when and if available basis, future unspecified software upgrades related to the software with each device. So not only are they required to deliver you all the hardware that they promised and all the software, including iCloud, Siri, and Maps, etc., when they recognize the revenue, but they're also required to give you those software updates when they're available. And the last section that I would mention, which is important when you're going more in depth in the details, is the section called Consolidated Financial Statement Details. So these are various notes after all of the financial statements are given, where they actually will go into very, very detailed granularity with each of the financial items. So some things that they go into, which I won't go over because they're far too complicated for this particular presentation, are things like specific tax obligations, and they'll go into different countries, things like deferred taxes, tax structures, and they might go into regulatory changes. They'll go into things like their leases, their debt. So in terms of like the maturity of their debt, different debt and notes that they have outstanding, and the interest expenses related on them. And the last one, which I think if I would suggest going into further detail, if you actually take a look at their 10K, are their purchase obligations. So I've been mentioning with their prepayment obligations, this is a very important piece of the puzzle for Apple. So I would definitely go over those details to get a better look at their purchase obligations relating to those agreements. And that has been a nutshell of how to read a 10K. I hope after listening to this, you might need to go over, you might need to replay this video a few times to get the hang of it. But I hope at the end of this, you'll have a better understanding and a grasp of not only how to look at Apple differently, but how to navigate a 10K generally. And as I mentioned before, the most important parts of the 10K are business, risk factors, properties, legal proceedings, MD&A, and financial statements and details. And obviously, depending on the company that you're choosing to look at, different parts of those factors and parts might be more important than others. So if a company, has a lot of legal proceedings, you definitely want to pay close attention to that part of the segment. If a company is very cash strapped and they have a lot of debt, you definitely need to look at their debt payment structure relating to their liquidity and a whole bunch of other things. So I hope you got a lot out of this presentation, and I hope to see you in the next one.